And for some reason, I got a lot of chicken scratching in my life.
On the rental one?
How would it seem more and more? Here, more and more people are getting rentals or living in a duplex so they can rent out so they can afford to have their own place, or an up and down, or they do something in their garage upstairs so that they can rent it out. You're hearing more and more of that.
Yeah, it's you know, rentals are becoming more popular, I guess.
They only have one, so that they could help to support their own.
But on the flip side, there's a lot of people getting out of because they don't want to be a landlord. They don't like the headaches, you know. So you know, it's you know, even for my kids that have moved back into the area, that's something that we're thinking about. But also, there's a lot of instances where people, and we talked about, you know, renting to a family member below fair market value. You know, there's a lot of multi-generational homes. You know, after the economy kind of went south in 2008, you saw a lot of families moving in together, multi-generational, just because of the cost effectiveness. You know, and then maybe as things have transpired, you know, mother or father passed along and now they have this vacant home or whatever, or maybe they had a double like you said, and now they're starting to rent out half of it because their kids aren't there or whatever it may be. But yeah, you know, rentals I have.
Situations.
Yep.
It was a biggie for a while.
Yep. And, but you know, real estate in Western New York is pretty stable. It doesn't really appreciate and really doesn't depreciate much. It's pretty stable. So it's not a bad investment. You know, I don't know that, you know, other than foreclosures and stuff, I don't know that you saw, you know, like you would in Florida or someplace like that, that huge dip in the housing market.
We're just finally starting to see a little bump up.
Well, and some of that, you know.
Not that big, but it is a bump up.
Yeah. And some of that is, you know, urban areas tend to reorganize, if you will. You know, you see people, you know, right now there's a lot of people moving back. When we were down there, I was fascinated the number of old factories that obviously have been turned into lofts, you know, and the living people wanting to live downtown and stuff like that. So, you know, that changes where people live and the demographics. And, you know, our old neighborhood where we moved out of after the kids pretty much moved out, you know, it's, you watch the turnover. You know, certain areas, you know, have that turnover where all of a sudden it goes from one generation to a new generation. So,
really high down.
Yeah.
So that's what I'm saying. We've seen a bump up of our prices of our real estate the last couple of years.
And it's still a seller's market. I mean, you know, I look at houses in our neighborhood and my wife go, "Oh, did you see that house is for sale?" And I said, "Yeah, it says sold." And she goes, "Well, the only one on the market a week ago," you know, and so obviously there's great places that people want to live in, but you know, it's definitely a seller's market, you know, and you can tell from my clients that are real estate agents, you know, when I talk to them, especially ones that, as I'll talk about with healthcare that I'm doing healthcare for, you know, and we're looking at projections, you know, even coming to the end of the year, going in spring, you know, not a lot of people move during this time of year, but they're still selling houses and people are still buying them at this time of year. You know, usually that's pretty rare during the winter months.
Yeah.
So. All right, so rental income. All right, we talked about you know, the Schedule E. As I talked about, we didn't do a lot on the back of the Schedule E. I don't know if you have fiddled around. You know, that's where the K1s and stuff. We'll poke an eye at it when we do some of the problems here that you did. You know, I forgot to do that last time. I was going to talk about the other parts of it where K1s come over from partnerships and Escorts and things like that, that's on that other side, or trust. You know, those are pretty straightforward. Like I said, you guys won't see any partnership returns or Escorts or trust returns. That's where you can write C supervisor on your notes on that one, Jim. Okay. All right. That's your C supervisor list. I can just wait for that first call from whoever you're working in the office. You can go, "Tim said you were supposed to do it," and hold up his paper. So.
Right after the clergy one.
Yeah, right after the clergy that owns a home and is part of a partnership. Yeah. All right, sorry, above my pay grade. But we have that, and like I said, you know, don't ever. Did anybody end up in that rental A worksheet by accident?
I almost did.
Yeah.
I think this is the one he doesn't want us to go.
Yeah, it turns everything red.
I said,
Yeah, I have somebody in the night class, Jean, that she battles red on the computer. And she doesn't like the red. And I said, well, let me show you what happens. And I actually did it for her on the return. And I showed her the Schedule E, and every box, but probably 6 or 7 of them turns red. And I said, watch me try to navigate now. And she goes, okay, I get it. Kind of, like I said, there's a lot of good things with it because there are things from it that will automatically carry stuff to the Schedule A. So if you don't, you were talking about the double, if you use half of that mortgage interest or property taxes, and you got to know to go put it on the Schedule A. And a lot of times what happens though is when you start taking somebody's mortgage interest or property tax and splitting it, then they're not going to be able to itemize, especially for 18 with it being higher. But you still need to put it on the Schedule A because, like I said, we have a divorce between the IRS and New York State. You may still get to use a lot of that on the state return. So, you got to be careful. But, because we're not using anything that flows from the Schedule E to the Schedule A for the rentals, we got to make sure we know to go over there and take a look and make sure we put it on there.
So we manually have to divide that off.
Mm-hmm. Yep, and that's where you got to be careful. And that's why we did some of those problems, and then they say in parentheses rental only, or something like that, so that we know. We saw a little bit of it when we talked about the business use of a home, the direct and indirect. It's another way to think about it. Does it directly relate to the rental, or is it an indirect where it only has a portion? In the business use of the home, does it directly relate to our business part of our home, or is it, relate to our personal side? So we got to make sure on that. Okay. All right. So exercises, like I said, we had a little bit with the Schedule E. They had some things. We had a little depreciation there. Let's go through the quiz, and then we'll see how you did on calculation, because I know I made some fun for you for over the weekend and calculating prior year's depreciation.
Now, is that going to be necessary to do if we had a client come in?
Mm-hmm.
Or we will have to do that?
Well, like I said, it's important because remember I was showing you if I go to sell that. So if that client comes in to see you for the first time and that's a new client and we have to make their return, basically recreate history that would carry forward in our return, we have to know how to calculate that prior depreciation. Now, if they come back to see you the next year and they said, you know what, I sold that rental, we have to have that prior depreciation for recapture. Even when we sell it, if it's not there, we have to be able to calculate it because they have to pay that recapture of depreciation when they go to sell that income property.
Because the computer can do it to figure out that year, how come they can't figure out the past year for us?
Just not in there. So it just
They did it on paper, but I don't think they did it right.
It was the same thing. I think I got it, but I will.
So.
I have.
All right. So let's hit let me get me out myself out of the way here. Let's hit the quiz at the end of 15. It's on page 1531. Okay. All right, Mary Ann, number 1.
Income from personal rentals, such as renting a personal cabin for less than 14 days, not intended for profit, should be reported on which tax form? B, form 1049-21.
Yep.
It's less than 14.
Yep. And that's, we talked about that a little bit, and, equally, what's the other thing that may show up on line 21 as far as rental income? Remember? Even if it's more than 14 days, what other rental income would we show there? What if I was renting to my brother and I would, yeah, under fair market value? Because, if we find out, I'm renting the other half of my double $200 a month to my brother, well, we know that every, similar property in the area is getting, 750. Well, we're not really in the business of making a profit or trying to make a profit or whatever it may be. So all of a sudden that has to be treated differently.
So you put the income there, but you don't get it. You don't get any expenses.
Well, you could put them on Schedule A in the 2% section.
Oh.
But if you don't itemize and the 2%, you can't apply it. So, it again, that's the spot to put something that is an expense that is an expense for generating income. Remember, we kind of talked about things that would fall in that 2%. So for 17, yes, 18, it's gone. But the big gist of it is that if we have where we're renting like that, we got to make sure that we have, we put on line 21 as income.
But you wouldn't, if you're doing to your brother, you wouldn't be able to use any loss, right?
Yeah. Yeah.
Okay. Really not.
Yep. And it has to be, that line 21 has to be gross income. It can't be after expenses. It's gross. So it's taxable income. Okay. All right. Number 2.
2, gross income from rental property should be reported on which tax form? Schedule E.
Yep, that's correct. Number 3, Marianne.
The rental property is depreciated by using macros using what recovery period? C, the 27.5 years and it's mid-month.
Yep, and always remember that mid-month on anything that has to do with rental income. Yep. Yep.
4, most furniture, carpet, etc. added to rental property should be depreciated for how many years? C, 5.
That's correct. All right.
Now, would that be mid-month also then?
Yes.
Because that's rent.
Mm-hmm.
Okay. Major improvements added to rental property should be depreciated for what number of years? With the 27.5, but do you have to always do that?
Yes. If it's permanent, major improvements, like I said, if it's siding, if it's
Permanent.
yep, if it's siding, if it's roof, if it's, whatever it may be, that's where, we need to make sure that if it's part of the structure, and that's, a renovation or something like that. So, all right. Okay.
6, all
Mhm.
repairs, maintenance, and improvements up to $2,500 per invoice item and/must be expensed instead of depreciated when choosing the de minimis safe harbor election. True.
This
Okay.
is why I was asking that, because now this says improvements. So if we did an improvement, and it was $2,300 for kitchen cabinets. Can we just do this, the minimums?
Good.
Okay. That's why I said
Yeah.
that 27.5, but is that a month?
Again, it goes back to, my analogy of the pie. When are we going to eat the
Right, when
pie?
you wanna do it. Okay.
Yeah. So, but if we did, roof for $10,000, well, the de minimis is not really going to apply.
Can't do 2,500 as that?
Not if it's part of the project. Yeah.
It's all or nothing on the
Mhm.
other. Okay.
Yep.
Which expense cannot be included for rental property expenditure? B, 100% of replacement because they live in half.
Yes. Yep. Yep. All right.
Income from a rental property would not include which one of the following income sources for 2017 tax return? D, December 2017's rent paid in January 18th.
Yep.
Which asset below cannot be depreciated? Land.
Correct.
Let's take it off.
Mm-hmm.
If a dwelling unit is used as a residence and is rented fewer than 15 days during the year, the income would be C.
That's correct. Remember I was talking, that was the golf tournament, the golfers up in Rochester?
Yeah, I almost put B,
So-
the 21, the line 21 is.
Yeah, when I did that one, going back to the first question.
Yeah.
Yeah, I thought, how come?
Personal rental versus, not intended. And yeah, it's a little bit of a difference.
Yeah.
So, yep, there's just a little subtle difference there between the two.
Payment received for the right to use a taxpayer's literary, musical, or artistic creation is called royalty. This payment should be recorded on B, Schedule E, Part 1.
Mm-hmm. Mm-hmm.
That's one just right under where it says rents. This is royalty. That's where we would put that.
Yes. Yep. Yeah. There's the choices on the
Rents or
Schedule E.
royalty.
Yep.
Royalty
Mm-hmm.
would be down.
Okay. And that's it on that, right? Yep. Okay. All
All the
right.
fun begins.
No.
All right. So we had, let's see, what problems did we did Ziegler, right?
Yeah.
Started,
Okay.
well, yeah, we had
Isn't that the one we did in the problems? Okay, and I'm going to just show you real quick. right.
Pulling up the Ziegler.
The one thing I wanted to show you real quick was page 2 of the Schedule E. Okay. Why I'm thinking about it, this is page 2 of the Schedule E, and it has on there, you know, if we look at these 2 sections, well, I guess I can't see that. This is part 2, where we have income or losses from partnerships and Escorts. So we have that, okay? If we go into that, we have where we can pull up a little bit of a K1, and is actually if it'll come up. Okay. A K1 will come up and it's a worksheet. So that K1 that somebody receives from that partnership, you can see the name of the partnership or S Corp. We'll put that P/S. It'll have a federal ID number, and then basically, you know, it looks like a lot, but everything will flow. You'll see where it's entered, but everything will flow from this to where it needs to go. And you basically just kind of fill in the blanks. All the work's been done on the 1065 and the S Corp side of it. Okay?
So they would come in with that form.
Mm-hmm.
And then you would just basically put the ordinary business income or loss from that K1.
Yep.
Over there.
Yep.
And then it would go wherever it needs to be.
Yes. Yep. Yep. So, okay. So we'd have all that. Okay. So that's, you know, and again, you're not going to see the other side of it yet with the 1065 for the partnership or the 1120 for the S Corp. Or if I go back and scroll down a little bit, here's the income from an estate or trust. Again, you're not going to see that 1041 side of it, but when they're done, it basically generates a K1 for each of the people. So if there's an estate and it's divided by 3 people, they'll each get a K1 and they'll bring that to you, or the S Corp or the partnership. These tend to come in late. Their deadline is March 15th, but they tend to come in late because it just compiling the information, getting all the information, and sometimes with the estates, it's tough getting everybody together on it. You know, trying.
When you know that a K1's coming, you say, well, we can't submit it to each K1.
A lot of times the K1 and it's, you know, some of them don't show up till June.
Then so what do? File it and
Then amend it. Yep. And some of them, you know, these people have these K1s, and some of them come from investments, and they come in late. You know, they owe their partnership, and they own 0.000001 of an oil well somewhere. And, you know, all these K1s are going out to all these people that hold this investment that have a K1. And, you know, you amend, and it's just a matter of paperwork because, you know, it's such a small, they might get 0.000001 of loss, and it might be negative $5. So, all right. So we'd have that with the K1 on that. So, all right. Okay. All right. Okay, so we have that.
Schedule E, page 1, I got a lot of red on my Ziegler.
A lot of red on your Ziegler?
Yeah, go to page 1, Schedule E.
Okay.
Are you on?
Yep.
How come mine's all red? We did this together in class.
You did a rental A worksheet.
We did it together in class.
Yeah.
Oh, we did that?
No, you must have hit one.
I did. Oh, maybe we did an F1 and then maybe I did it wrong. Maybe I didn't hit. No. See, that was right.
Yeah, so that's indicating to me that you did somewhere, you did a rental partial worksheet somewhere.
I'll change it.
No.
It's still red.
Yeah, somewhere. So
I
go
hit
up in
the-
that box and hit that.
Yeah.
Hit F9. Yeah, and you must have deleted it.
You want me to open it?
No. So somewhere along the line, yeah, you got into rental A worksheet.
Oh,
And
how did that?
somehow you got it, you know, you might have got a part, and that's why I say it. That's what I was talking about.
Oh, we did this together.
Yeah. And that's where, you know, you got to be careful with it.
We still had
Oh, maybe because I was trying to do the depreciation.
prior years, if we had to do that for this one.
So maybe I hit it then, yeah.
You might have got into that, you know.
I did something, I had a bunch of
So maybe that's
things
right.
that I didn't know.
Okay. Now, which one were we trying to, let's see, we were doing the prior depreciation for the Ziegler
Yeah, we wanted.
Tell us to go.
and, oops. In the worksheet here. So we had, so what'd you come up with prior, Jim?
We,
So the first asset that we had was,
The year, let's see. They put it in 2002, right?
is that the one they put in the service, the 82? Yeah, 2002.
Oh, wait, are we doing it?
Let me get to Ziegler here.
Are we doing the roof? Not all of them.
Yeah, we wanted to do all of them.
Okay.
So we had, whoops, Ziegler. Okay.
Now I'm not gonna remember how I did it either.
Well, if we use our, let me see here if I can bring it back up. All right, so we had to do prior depreciation, okay? And if I go back to chapter 15, we have our we had a residential rental property. We knew that it was going to be straight line, you know, GDS straight line, mid-month, the convention, everything. So that puts us in table 8.6, okay? So we had to do, which month did we put it in service?
2002.
So year one is,
June 1st.
Okay.
That was 7/27.
Yeah, so that was from the software. So, okay, get my calculator here.
That was from the software? I didn't come up with it?
Well, the first year was calculated. Oh, I'm sorry. No, you're correct. So we had, what was the number here? So we have, so what was the number? 30, I'm trying to,
36.9.
okay. So we had, seven, well, 726, 727, yep. 726.93. Okay. So that would have been the first year. Okay. And then the second year was,
I have 1342. I have it all the way down.
okay. Yeah, basically, because you look at the percentages
Yeah.
for how many years?
14.
Wait, 1,
Prior?
2, 3, 4, 5, 6, 7, 8.
Because we put it in service in what year? 2002.
No, it was 9 years. Isn't it? 2002.
2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So how many years is that? Because we have to have the depreciation that was taken through the 2016 return.
You're right.
Correct?
I did it because 2 through 9. was
Oh,
the
yeah,
same.
okay.
So I just did.
So we had to do it through the 2016 return.
Right.
So what does that
14
mean?
years.
14 years.
Exactly.
So it's 14
Yeah.
years.
Because that was 14 returns, if you will. Because we started it in the 2002
Right, so what
return.
do you do with this week?
We put it in the prior depreciation.
Mine 7. Right?
Yep. So what did you get for a number, Jim?
18,173.
Marianne?
I didn't get anything because I didn't know where to put it. I didn't know what to do with it.
Well, what was your calculation?
Oh, it was 1342 was all the way down then afterwards. So it's 727 then 1342. Then I said, okay, what do you do? Just add them all up.
Yep.
Yeah.
So for 13 years, you had the 1342 and the 14th year was 727.
So you got every year, you got all 14 numbers and added them all together. We said 14, right? Yeah, 14.
So it'd be 1342. So I would have got 18,173.
Yep.
Good.
Okay.
And then where do you put that?
That goes, that's that green number for prior depreciation. and line 7 on your asset worksheet.
Okay, so now this is where we lost that all red.
Well, go to, you know, if you go to your tree on the left, you got your 4562.
4562, yes.
Mm-hmm.
Also, one of my worksheets
Mm-hmm.
would be the 18,000.
Mm-hmm.
Yeah, so now the prior depreciation, I would just put the full amount there
Mm-hmm.
on the first red, or
Both of them. On line 7. Yeah, just fill in both those that are red there.
we manually have to do that also.
Yep. And again, you know, that if I, you know, I'm going to do this here and kind of show you. Oops, I can get into it. If I go to my sale, okay, and I'm going to sell this property now, and let's see, we're doing a 17 return, so I'm going to sell it in December.
You're still on the same?
I'm on a different spot, okay? And I'm going to sell, let's see, if I sold it for 80, I'd have half for 40. All right. So you can see my prior depreciation, I have to recapture. Okay. See where that number comes in? So if you hit the top three, there's three little gray boxes across the top of your,
Yeah, 45.
yep, your asset worksheet.
Okay, yeah. Oh, the sale box?
Right up there?
Yeah, hit the sale box. That's where I'm at.
Okay.
So I got this depreciable asset. It's hard to see, but I said I sold it December 1st of 17. I said, and what, this is a double, correct?
Yeah.
Right.
So I don't have to claim the entire, just half. So I put, I sold it for 40 in there. Then you guys can't see it right here, but depreciation right there.
Sold it for 40, just for 40.
Mhm.
Cost basis. Wait, where'd you put the 40?
Line 4, selling price. Yep. So I have that depreciation in there. And then what I have to do is, you know, I have to take basically, on line 8, I have, let me just add it up here for you. What was that number again? 18?
173.
18,173.
Yep. So, you know, I have that plus the current year's depreciation. That's what's on line 8 as a recapture. Okay. All right. So that's when you sell it, that's where that recapture, that depreciation goes in there.
So you sold it for 40,000 because you sold it actually for 80, right?
Mm-hmm.
So you put 40,000. You originally have the 36.9, so that's going to subtract that off. But then you're going to add back in the 18,000
Plus the current year.
plus the current year that you're taking.
Mm-hmm.
Because you're depreciating it for 2017, but I sold in 2017.
Mm-hmm. Mm-hmm. But like I said, you know, that's why if somebody comes to you and they have not been depreciating a rental property, they still have to, you have to do that prior depreciation as if they did to be recaptured. Because that's like I said, that's kind of that too bad, so sad. So, well, go ahead and put it in there.
Well,
And then if I say I had an 8% commission. Okay.
Oh, the selling expense.
Mm-hmm.
So you figured that 8% out yourself.
Yeah.
So we had 40,000 minus the 39.
now do I gotta fill everything in to do this or just?
Yeah, if you want to, you know, go ahead and put date sold. If you want to try it, you're on the sale worksheet.
Yeah.
Yeah, go ahead and give it a try.
When did we sell it? Today?
We're going to say 12/1/2017. Because we got to sell it the tax year.
Oh, and our amendment comes up with the date of place of service
Mm-hmm.
and the address.
Yep, we're going to say we sold it for 40,000. Okay. All right.
That
And
was already figured.
yep, and we're going to say 8% on the there. So what is that? 3,200. So selling price or selling expense.
Divided The land, we already took that out, so it knows it?
Yeah.
Okay. So we took 8%, was how much?
3,200.
Oh, you're putting the selling expense?
Yep.
Of 3,200?
Yep, so then you can see the gain that they have to claim.
Well,
So the depreciation still stays the same, adjusted base, the gain, they have to actually claim the 15,000.
so we took the depreciation.
And then what percent do you have to?
So you took the basis
Yeah.
and you subtracted the adjusted basis, which includes the recaptured depreciation, to get the gain or loss. So see, if you take that number and subtract that number, you get that number. So if you take line 5, subtract line 9, that's where you get line 10.
Because if you take your selling price and your cost basis, you subtract that from the 40, you should come out with 3,100, not 41. That's 40. All right, so see how you have your selling price and you have your cost base? Don't you subtract that from that? You should come out with that?
No.
No, that's why. That is what?
That's land. That's a basis adjustment because you don't depreciate the land.
So why do we have that in there?
It just carries from the other side.
Just to show that it's there?
Mhm.
It doesn't do anything with calculations?
No.
Just confuses me.
So basically, like I said, you're taking line 5, subtracting line 9, and that gets you your gain on line 10. All right.
See that now.
And then
Say
where
that
it's,
again. I don't.
So it's nothing to do with,
so line 5, so if I take that,
Yeah.
subtract my adjusted basis, because that's my includes my recapture depreciation.
Well, what do we do with it? Take it off the, how do we get this number?
What's that?
How do we get 24,741?
That's the adjusted basis.
from the 40 minus the 36,9?
Mhm.
Plus the
Well, you know, you're trying to do too much with the numbers.
I am.
Yeah, you're trying to
I'm not
manipulate the
trying to-
numbers to try to get, don't do that.
I'm trying to figure out how we got to that figure by adding all this or subtracting.
You can't, because it comes from a lot of different calculations.
That's fine. Okay.
So, but you basically, this number right here, the 24,741.
Yeah.
That is your adjusted basis. So remember I said that we have our basis and we've added to it, but then we have to recapture depreciation.
All right. So it's not a clear cut thing on this part.
No, it's not clear. You're, looking at them stacked up on top, you're trying to add and subtract to get them to get to that number.
Yeah.
And that's why I say you're only really taking line 5. So if we take line 5, which is 36,900, and we subtract the 24,741, we get the 12,1519.
Yeah, which is not there. It's 15,259.
Whoop, I subtracted the wrong number. I'm sorry. 36,900
So you're
minus
actually doing it with the selling price of the 40.
24,740. Yes, because that has the plus.
You subtract 9 from 4.
Yep, because
not 5.
that's where you're getting that difference on the basis there.
That's where we're coming from,
Mhm.
15,259.
And that adjusted basis again is because we're recapturing the depreciation. Okay.
I still don't. 24. The adjusted basis.
Yes, this is going to put the right selling price in there?
Well, you have to remember that adjusted basis is
It's 18, and then
okay. And then the property code section. All right. You got to do that 1250, the second box down. Because it is depreciable real property.
wait, which one?
Where it says property code section, the second one down that says 1250. Yeah, right below it says gain or loss, then the next line says property code section.
Oh, yes.
And then the second box says 1250 depreciable real property. So that's the
Why
one
do
you check. That's what you check. Yep.
Real property.
Mhm. So that's the gain that we have to take.
And then that will transfer to the 1040.
Schedule D and then to the 1040.
You'll go on Schedule D.
Mhm.
Now where's my page schedule?
So it goes to the Schedule D and it shows up as a long term.
Let's see, I still have zeros on mine. Where's yours?
Schedule D, right at the bottom, line 11 on the Schedule D.
I'm on Schedule D. Let me go on to page 2 of Schedule D.
No, page
Mine
1.
is still zero. That was all in red.
The Schedule 1. Or so you're on Schedule D, page 1
Schedule D, page 1.
and line 11.
On line 11. Zero.
Okay, that's because you, somewhere along the line, you got that rental A worksheet. And that's why I say when you go to do that with depreciation, it's just a nightmare. That's why it's so important to stay away from that.
You should delete that.
Well, like I said, some people love it, but you got to from year to year, it becomes a nightmare. Okay. All right. So let's see. What did you get for 15-1 for, yeah, 15-1, right? Jones? This one was interesting because we had, where did their rent come from?
Oh, from the city.
The rental authority. You will see some of those. So,
Does that mean anything though?
no.
You still use
Just-
it?
It just shows that you know, and it's kind of shows you another use for the 1099 miscellaneous.
Let's see.
I come up with losses.
Mm-hmm.
During that losses.
Balance due.
I came,
1,040.
I came up with 1639 and 386.
Okay.
But I don't think I did finish the depreciation. I wasn't sure if I was doing that.
The depreciation for, let's see, what did we have that we depreciated?
Plus I did it de minimis.
And again, you know, it depends on how you did it. I mean, I could give you an answer and if it was handed differently. So,
Let me see what I did.
you know, the
No, I finished mine, so no.
the stove was 5 years and the bathroom remodel was 27 and a half.
Okay, wait. The stove was
5-year depreciation. Correct?
Wait, what was the
That's
27
what
and a half?
Pick the de minimis for.
Yeah, and again,
Which is okay. I mean,
Mhm.
just, I could have done it either way.
Stove was,
depreciated for 5 years. And you should have depreciated the bathroom remodel for 27 and a half.
stove is.
Okay?
Cost of stove, the $800? I did that as other.
We mean other.
Put it on as other. It's only $800.
Other what?
On the expenses.
Okay? Well,
Let's see, hang
if
on.
you're going to do that, you have to put it as depreciation, then you have to do a thing for a de minimis.
I put it as stove, other, 19, 800. Why?
Okay? But you have to explain that it's a de minimis. So you'd have to do a statement for that.
So, we
Yeah.
Yeah.
did the same thing.
Yeah.
Just-
And that's fine. And that's why I say, you know, it can be different answers if you chose to do that. It really doesn't, and the problem doesn't give you any, you know, a lot of the problems will give you that you have, they say that they want to take the full useful life or whatever, but yeah, you can make the decision on that.
All right, I didn't take the prior depreciation for this one. That's what I didn't do. So it could be different because of that. 'Cause I wasn't sure if I was doing this correctly.
Well, not really, because prior depreciation doesn't affect the current year. It would only affect it if you had to do the sale of the product.
Oh, really?
Yeah,
Okay.
yeah.
All right, so I should have gotten out.
So
So we're different.
what, for the property then, what did you get for current year depreciation?
For the current year, I have 2209.
Oh, okay, yep.
Yep. Okay. And then we had holiday. which was 2 separate properties.
That remodel
On which one?
on zoning.
Okay.
Did we add that then to the cost basis?
No, you have to do it as a separate. Because the property was put into service in 2006 and the remodel was 2017.
Okay, so then we just depreciate it. We don't
You
have
do
to
it-
add it back to,
No, you don't add to the basis. You have to do a separate asset worksheet just for the remodel.
so what are the answers to that?
There is no real, like I said, you guys took a de minimis. What I might tell you would be different because whoever did the
Still two
problem.
different answers.
So,
See, because we both took the service.
Yeah, but
So do
my
you
answer is
have?
different than yours.
well,
but what'd you do with the remodel?
For the remodel.
Did you do a separate asset worksheet for the remodel?
Depreciation.
No, this is where I did it I did it over the 27 and a half, and I did it at 100%
For the remodel?
for the remodel.
Mm-hmm.
Did you have 118 and?
For the first year?
I had 118 for the current year depreciation of it.
Mhm.
So did I, so we were both right or both wrong.
So why are we different then?
Well, I mean, it depends on, did you get all the other income? So go to your 1040 page 1. Jim, we'll see where we're different.
Okay.
All right, so what'd you have on line 7?
Whoops. Line 7, I had 38,241.
Okay, so that, we have that,
And then 8A, 1342.
okay?
Let's put on that one.
Yep. And
That's
then
a
on line
gamble.
17, what?
17 minus 232.
Okay,
No,
Are we different?
so,
Yeah.
yep, he's got a profit of 2,095. So let's go to your Schedule E.
Okay.
All right, ooh, you got a red one too.
yeah, well, that's, I knew it.
Yep, you got a rental A worksheet going on there, see it?
Okay, that's what I thought, because I had 2 of them. Can I just delete that?
Yes and no.
Because I think I did it twice.
Okay, let's see what you have for your numbers first. So Schedule E, so scroll down a little bit on your Schedule E there.
We'll go with 3. Rents. 8545.
Where am I?
Yep, 8545, okay. And then what was your total expenses? Line 20,
8777. Why is
okay.
I have 2 800s here? It says 800 for the stove for other, and it said
Total,
total other.
that's the total
Okay, so it's
expenses.
only gonna do it the once, so.
Yeah. Now taxes,
Taxes. Taxes I have is 2593.
all right?
It's red.
And mortgage I have, interest is 1837,
Okay.
because I did half of that.
Mm-hmm.
I did half of the homeowner's insurance.
Okay, and this is where you got caught. See what happened? Because you had that rental A park worksheet, it didn't carry the depreciation. Remember I said depreciation doesn't work well? So if we look,
My depreciation is 2327.
yep, and that shows up on your, there, where did our depreciation go?
There, I think it's this.
Yeah, but they didn't carry over because of the rental aid worksheet. See right here how our depreciation line is
Doesn't show
0.
up, yeah.
Let's see here.
Oh, because I knew there, because
Let's see if I get it to carry over. Yeah, I think. Your depreciation is 2327.
2327.
And that's where it got hung up on this. Let's see. All right, so we got it to carry over. So we just got
Now-
that sheet out of there.
so where did I make the mistake? I knew it, because yeah, where did I get that?
And again, you know, you can end up stumble on it by accident. You just got to be so careful that you don't get that rental aid worksheet.
I did that with Ziegler when I was trying to do the depreciation. I don't have it here.
So now what do you show, Jim, as your, so go a little farther down there.
What's 21?
So 21 is, let's see, loss should be 232,
That's what I have.
okay? All right, so let's go back to your Schedule E. Or, excuse me, your 1040, I'm sorry.
Well, we may have the same thing now. What's your balance now?
679 and 444.
Okay, I'm 1639 and 386.
Okay, so let's go, yep, let's go up there. Okay,
So we're going back to
so,
1040.
yep, so go all the way to the bottom. And what do you have on line 37?
7, I have 40, 10. No.
Okay, so go up.
I have some gambling going on here. Did you get the gambling for 630, 659?
No, because they, let's see.
So she had some losses.
She lost
But
1,000.
you still gotta claim winnings.
So to claim it right, so you have to still have the winnings on there, and then the losses go somewhere else, doesn't it?
Losses go on the Schedule A.
Schedule if they deduct. If they don't deduct, they lose it. They
Mhm.
still have to gain the gambling,
Yeah, so
right?
was there a W2G?
Because she didn't itemize,
Yeah.
did she?
So you still had to put that on. So you still have to put the winnings in.
Even though it's, okay. that's
Yep,
what they
so go ahead and put that on, remember it goes on line 21? So pop open the, there you go. Mhm. F9 there. It'll give you your W2G.
Yeah, for some reason, my
So
gambling
go ahead and put that in
losses
there, all right?
came up as 659 as gains over here.
Yeah, because they were
I
able to
see.
itemize.
Oh,
And you put the $1,000 losses, but they're only able to take,
it did, yeah, it
Equals.
doesn't come up with it, it doesn't show it. That was my one.
so they're only able to take up to and equal to their winnings. So even though you put 1,000 in there, it's only gonna carry over 659.
The general sales tax. Oh, that was the other thing, the state refund for the 342.
Okay, well, let's let Jim catch up here.
Yeah, I gotta make sure I have the state.
Okay, so you got that in there?
Yeah.
Okay,
So
all right, so let's
now
go back
go
to, yep.
page 2 there,
Yeah.
put in the,
So what, go to your page 2.
Okay.
All right. So go to the top of your page 2, line 38.
40, 10.
Okay. All right. And what did you have for your standard or itemized deductions?
63, 50.
Okay, so we're there. Okay. Keep heading down. All right. What do you have on line? What's your,
47?
Yep.
39.78.
okay. Keep going down. Did you have any non-refundable credits?
No.
Okay. Going down, going down. Okay.
39.78.
And what was the federal income tax withheld?
23.71.
Jim's got 3201.
Is it because of that state refund in there somewhere?
No, because it's 3201.
It's 3201?
from her W.
Are we going to the W-2 then, right?
Mhm.
My W-2. How did I get 23.71?
You entered her Social Security. All right, so now you guys got it.
Oh,
What do you got?
777 and 386.
You got 489 on the state.
And I think maybe is it because of the state refund? Did that do anything on the state?
Nope.
No.
Because
Okay.
they didn't itemize anything, right? So
No.
that's like,
Yeah, so there wasn't anything on that. So
So the 342 goes on the itemized for the state refund.
did they itemize last year?
No.
Then they don't. You don't claim it. Because if they don't itemize, you don't have to claim your state refund.
so we're, state is where we're
Well, she tried to itemize.
trying.
Yeah, so that's where you don't itemize on the state side.
Let's figure it
All right, so Ryan Holiday. Let's see, I had, can't remember if we got all the way, I got all the way through this one. I don't think I had his W-2. Yeah, I had it in there. I had him owing 4443
Oh, he doesn't like you at all.
and state balance of 1,093. But
Really?
hold on one second here. I think this is one I sold something when I was doing it for somebody.
Oh,
Yep, hold on one second. Because I was playing with this one when I did it. Okay. So I had a refund of $1,583 and a state refund of $857.
Oh,
I had 1846 and 860.
I had that, but I got the original.
Okay, so let's go through it. Let's go to your 1040 page 1.
Okay.
All right.
Lucky day.
Yeah, that rental A worksheet, you know, you can see how it wreaks havoc on things, especially when it comes to depreciation. All right, so line 7, I got 6150. On the rental, I have a loss of 736. Okay, so we have that. And then I had the alimony paid 3,000.
Yeah.
So that gives me an AGI of 5731.
314, 57, 314.
57, 314.
Yep.
Okay.
My itemized deductions were 12,397 on line 40.
Okay, wait.
So it's 1040 page 2,
Page 2, wait, what do you have?
12,397.
I have 12,090.
Okay, so let's go in there and take a look at our Schedule A. All right, he had some medical, but it didn't help us because we didn't get past the 7.5%.
Correct.
We had state income taxes of
This is where I was
4047.
wrong. I have 3709.
Okay,
So where could I get that from? Let me go back
so
to
well, we
the-
had state taxes. He had state income tax withheld of 3678, correct?
Yeah.
I have a feeling that's.
What do you have, 3340?
W2. Let me check my W2.
Yep. Well, but what did you do with the fact that he owed an additional 338?
It didn't show up.
But where did you put it?
I'm looking for it now.
Okay, do you remember where we put it?
I know where I put on notice.
What do you have on line 5A?
40, 47.
Okay,
Did you add it to that? Is that what we
well,
did?
but you have to put it somewhere, okay? So we're gonna go to our 1040 page 2. All right,
I'm still looking for my W2. My W2, I wonder if I had the wrong figure. Let's see. First part.
okay, we'll check that first and then we'll have you follow along here.
I have it correct, 3678 for my state. On my W2. Okay, so now what page do you want me to go to?
1040 page 2,
Okay.
okay. All right, and you're gonna go down to line 65. And you go into the box on 65 and hit F9.
I have it, 338. Is that-
Okay, but
Where were you?
you did it as an estimated payment. It's not a payment. All right, because you didn't pay it this year. You paid it in this year for previous year.
Schedule A, oh, page 2,
So no, 1040,
1040.
page 2,
Yeah.
line 65.
Amount of payment. I put down.
Okay, and we go there, and then you go federal state tax paid. Okay, and then you go down to the line that says New York state or local taxes paid from a previous year. So this one right here, not in the grid, but the line right below it.
Oh, I
I
see
go to
it.
65 and have to do a worksheet.
Yeah,
I
go
gotta
there,
take it out of the
hit
other
F9. Yep. And then fit, yep, you got it there. Yep. And then scroll down. Yeah, perfect. That's right where you got it.
The state and local due from previous year's return is 338. So
Yep.
I had it wrong.
That way it carries over to your Schedule A.
Now
Okay,
now I'm at 1596 and 861.
okay.
I get closer to that.
form show up on my tree?
Yeah, it's way down. See where it says miscellaneous forms?
Oh.
Yeah.
okay.
Yeah.
That's slash
All
F.
right, so let's go to Schedule A. All right,
Now I have 4047 for my.
okay. So total taxes paid should be $57.97.
I have 5820.
Okay. What'd you do for your real estate taxes?
I don't have it. I have personal property taxes 1750.
Okay. And what else do you have on there?
I have 31 for the New York State disability.
But if you did NYSDI, it's already up there on line 5A. So you need to take it out of there. Remember I told you that, you know, if you type in on the W-2 New York State Disability Insurance,
automatically
it automatically comes over there.
So with my other, I have to take it out too.
Yeah.
So now I have 57.97.
Okay. We have interest paid 3,600.
Yes.
Okay. Charitable 3,000.
Yes.
We didn't have anything else, so that should get us to 12,397.
Yes.
Okay.
So I'll tell you my refunds now, 1583 and 857.
Yep.
Mhm.
Okay. All right.
So that means it's all because I put that thing in the wrong spot.
Yeah, you're fighting the handling of the state tax refund and,
Yeah.
and balance paid.
I am.
Yep.
I gotta think
If
about
they
that.
owe, if they paid tax, state tax into the previous tax year, it goes on line 65.
Eight, eight,
Yeah, so right where you put it, Jim. Yep.
previous.
Okay.
Goes on which one?
1040 page 2, line 65. Okay.
And I have to go to an F9 for it.
Yes, that federal state tax paid worksheet. And then you got to make sure, because what you did is, because it threw the calculation off, it didn't put it on the A, but it made it look like you made an estimated payment of 338. Or sometimes what happens with that too is when it shows up on that line, you basically did it. Some people will not take their refund, and I'll show you how they do it when we do the taxes paid, but they'll take their refund and they won't take it as far as having it sent to them. They'll roll it over to the next year. So, okay. All right. Okay. So that gets us on that one. All right. That's good. But you guys are all dead on the rental, which was the important. It's just that we're still fighting the state a little bit.
Yeah, we're always.
Well, literally and figuratively.
I know. Yeah.
So, okay. All right. So let's take 5 minutes and then we're going to do the healthcare chapter, which Mary Ann thought was so dry. We'll try to make it exciting. All right. So we're going to get into healthcare. All right. So we're on chapter 16. And as we were kind of talking about a little bit during the break, healthcare, the mandate, as they call it, or the shared responsibility, is going to be for 2019 disappears. You still have it for 18. So even though there's the new tax law, we have it for 2018. Okay. Health coverage. We've been doing this thing, and I keep telling you to skip over it and ignore it and just do this and check that and check this, that ACA worksheet. In the software, everything is driven by the ACA worksheet. It tells us if we're in the marketplace. It tells us if we're not in the marketplace, whatever it may be. Okay. All right. So we have that. Okay. The Form 1095A is something that comes from the marketplace, okay? So, you see here that the Form 8965, we're going to talk about that. We're going to talk about that 1095A, okay? Really what it boils down to is the 8965 is the form that you would use if you're trying to get an exemption, all right? So if I do not want to pay the penalty, I have 3 sections on that 8965 that I'm going to use, all right? The 1095A comes from the marketplace, and we would get it if we're receiving a subsidy or credit, all right? So if we have a bronze, silver, gold, platinum, any one of those, that's where it comes from, okay? So we have that, all right? The 1095B is something that somebody would get from an employer, a B or a C, okay? Or a B can come from the state for Medicaid or the essential plan, okay? All right. Okay, so that's where that comes from. All right. So that is really what drives our forms, okay? Now, the big thing that a lot of people don't realize, and you see this term tax family, okay? When somebody applies for health insurance through the marketplace or is using the marketplace, it's based on their tax family. So those are the individuals that are on the tax return. That's why we're doing that ACA worksheet. All right. So we have that ACA worksheet, and we have it where we have the checking the boxes and then checking after the names, and only shows up the names. So it's not a matter who lives in the house, it's who's on the tax household. That's the way all this is driven. So when we were talking earlier about multi-generational homes, you might have, other people living with you, but when it comes to the Affordable Care Act, their income does not matter unless they are on your tax return. And this is where we get into the dependents and stuff like that, okay? So again, you're based on your tax family, all right? So those people on your tax return, because that ACA worksheet, the only time we're asking questions is about anybody that's on the tax return, okay? All right. Minimum essential coverage. Basically, it talks about government-sponsored, employee-sponsored, coverage under certain plans purchased in the marketplace, and those with at least one day during the month are considered to be covered for the entire month, okay? So if I have coverage one day in a month, I'm covered the entire month, all right? Okay, there's a whole list here of minimum essential coverage. If you look, it talks about Medicare Part A coverage. And if you know Medicare, Part A is what? Hospitalization. So really what we're looking for, do they have minimum essential coverage to cover hospitalization? It really doesn't have to be, anything that has more than additional parts or whatever it may be. It's kind of just driven based on that, okay? So we have it based as minimum essential coverage. All right. Okay. Goes through all the different programs, the TRICARE, the COBRA, you're self-insured, you got it through a employee or employer or whatever it is. So, that's kind of where those all go. All right. Those are all the minimum essential. It talks about, let's see here, may talk about stuff for the government. Somebody's a citizen of Canada, they have socialized medicine, I guess you would call it up there. So, all right. Okay. And it talks about health coverage exemptions. There's basically 3, okay? You can get it from the marketplace, you can get it because of your household, or you can claim it on individuals, all right? And we'll talk about that, how it works on the 8965, all right? And all 3 of those, how those work there. On 16.6, we have the exemptions. These are exemptions, again, that are driven by the 8965, okay? You can see the ones that are claimed on the return using those codes. Obviously, the one we use very often is A and B. A is considered unaffordable. That means that what you're required to pay is greater than 8.16% of your household income, or for those people that have a short-term gap of less than 3 months. Those are the 2 that we tend to use most often, okay? All right. Okay. And then we have some C. As you can see there, that if somebody's part of the healthcare sharing ministry, I don't know, every once in a while I hear on that MetaShare, you hear that ads on the radio about, the Christian-based, where everybody, it's kind of like a co-op. That's really where those come in. The people do those together, okay?
Teresa does that.
Yeah, and it's good.
But she's a massage therapist. She's on her own.
Yeah, and some people do that and it works well. Sometimes they get a little picky on what they'll cover, and sometimes you have to pay it first and then they reimburse you. So, but yes, that's the co-op model. It's kind of the old union model.
So then we would have to use D as the code if we were doing hers with the healthcare part.
Well, for granting an exemption, yes, because if they're saying that she did not have insurance through a marketplace or whatever, but we'll show you how you do it on the form. But if she had that for 12 months, then we don't. There's kind of a nuance. So, okay.
So it's basically a way to get insurance on your own if you're not covered.
Mm-hmm.
Oh, that's interesting.
Yep. So, because it's like I said, it's the old union model where everybody kind of pools their money,
Yeah.
but they tend to be a little more restrictive on what they cover because they won't necessarily reimburse. And what I found from people that I've talked to that have used it, it tends to be a little more pre-authorization driven so that you have a little bit more there. Okay. All right. So we have that. Okay. We have, let's see here, talks about incarceration, things like that. We actually have to do training for that, believe it or not. Now, the bottom part of that talks about that you get, you need an ECN. It's a number. And I'll show you how to do that when we get into returns. Basically, that's where you submit an additional form to a place in Kentucky, right? Yeah, Kentucky. And it's an additional form that you have that allows you to get an exemption on the through separate things, and it's a hardship form, okay? Or it may be another form with, and a lot of these have to be done almost prior to the tax year. So you're going to go into a tax year, and it's kind of, let's see, let's back up. The ones that we just saw that we just talked about with the letters, okay? You can do those on the tax return, so you can kind of do it after the fact because your tax return is after the tax year. Some of these ones that you need to get done through the marketplace, you almost have to do prior to the year. So you almost have to say that you're going to have, you can't afford it because of your projected income for the upcoming year, and you would have to put in there. Now, there are some that you can do afterwards that are basically hardships, and we'll talk about those in a second. So, okay. Shared responsibility, basically that is the penalty that you pay because you did not have insurance. All right. It can be $695 per person, about half of that, or 2.5% of your modified adjusted gross income, whichever is greater. All right. Okay.
Does it say that here?
No, I just know that. Okay. Well, yes, it does. If you go to the top of 16.8, where it says for 17, share responsibility payments calculated as the greater of 2.5%. Okay. And the thing you got to remember about the marketplace is you have to count your dependent's income as part of your modified adjusted. So if I have a 20-year-old that's living with me that's making $5,000, his income is not on my tax return. Okay. So his income is not on my tax return, but it is on my form to figure out shared responsibility. So his income ends up on my tax return, but it's not really on there. And I'll show you how to do that too. Okay. Marianne's going, that makes absolutely no sense.
Yeah, because the first time you said it, everyone in the household,
Mm-hmm.
that's on your tax return, that's what you have to concentrate on.
But if I have a
Or may not be on the tax return.
well, the 20-year-old dependent is on my tax return,
Oh, then it's
but his income is not on my tax return.
no, he's on your tax return.
But his income is on my tax return for the shared responsibility penalty. Tim's kind of going, that makes even less sense.
Well, I could understand it.
Yeah.
Because I went through it.
So, okay. And then obviously, you have a way to get out of the shared responsibility if you don't meet the filing threshold. Okay. All right. And as you can see, that 2.5%, that's why I say a modified adjusted gross income, because I'm basically only calculating it on those things above the filing threshold. So it's even a totally different calculation from what we typically think of that modified adjusted gross income. All right. All right, on page 16.9, we have some 1095A. Okay, so that 1095A, that's something that's going to come to us from the marketplace. Okay, and it's going to have all these funny numbers and names and stuff, but basically it's going to show us who was covered in the marketplace for that year. All right, and it's going to show us their coverage and the credit that they got. All right, so when we go to reconcile things for those plans that are bronze, silver, gold, and platinum, that's where they go. All right. Okay. On page 1610, there is an 8965. I'm going to show you how to do this when we do one of the problems, because this is kind of going, they just threw this word pending in there. And I'll show you why you put that in there, because that's that ECN or that exemption certificate number. And again, this is something that we do kind of after the fact. Okay. 8965, 1611. We're going to talk about it a little bit more. I'm going to do the form because it's a lot easier in there. Okay. Okay. So I'm going to show you here. Give me just 1 second to bring it up. I got to find them because I have them as shortcuts on my desktop. But I'm going to show you these couple forms. And what we're going to do is they're actually going to do these problems in here. Okay. So if do you guys still have on there, we're using from problem 3.2, we're going to use Michael and Lori Gray. So if you want to find those. Okay. Okay, let's see here.
Is it Michael and Lori, not Gary and Lori?
Michael and Lori, right? Gray? Okay. Let's see here. Where are they hiding it now? Okay. I don't want it. Okay. We got it. Okay, why is it application? All right, why won't it let me download that?
How come each one doesn't have that?
No, I don't know, that's a little, yeah.
Allocation of income. That's not my miscellaneous one.
All trying to get the form here for you. Give me just a second. There we go. Okay. All right. So if you take a look up there, you guys see that? Okay. Okay. All right. So this is the form. This is the one we're going to talk about in part 1 of the 8965. And this is the form that you use for 17 and 18. Kind of tells you how to apply. These are the hardships that you can do on the return. Okay. As you can see, you're homeless, you're evicted, you shut off notice from utility. So if I say, you know, I got a notice that they're going to shut my light bill off, then I could get an exemption. Okay.
So you have to attach that, show that proof of that?
Yep, you'll have to do that. So, okay. Domestic violence, death of a close family member, say that you had to, you know, family member died and you had to take care of all the things and that's why you didn't have insurance. Fire, flood, or other natural, bankruptcy, medical expenses you couldn't pay, increases in expenses. Talks about the child, health place, marketplace difficulties, an adult in your tax hold was determined ineligible and you had to pay for things, got a notice from the health insurance and all this. And we go to 14 and what does it say? You experienced a hardship not listed in 1 through 13 that kept you from getting health insurance. Exactly. Okay.
My hardship is different.
Exactly. And, you know, basically you have to tell them about yourself and your household. You do a little description as to why. You fill out the little form here. It has all the different things and you can say that you unexpected. You write a letter, put a few tears on it, and then you mail it to London, Kentucky. Okay?
This will save you $6.95
or 2.5% of your modified adjusted, which is the income above the filing threshold. So, okay. So we have that. All right. So what I'm going to do is we're going to talk about, I'm going to go in and I'm going to open the grays. I think I have them. No, I don't have them in here. I thought we did the grays.
We did.
All right. I thought I did it on this one. Okay. Hold on 1 second. All right, let me get grades in there.
We're on time.
Okay, so go to page, the workbook page, or workbook page 16.4 and 16.5. Okay. All right, so I didn't do anything with the ACA worksheet yet on this one. All right. Okay. So if we look at the thing says, rather than receiving health insurance coverage through Michael's employer, Michael and Lori obtained their insurance through the New York State of Health Marketplace. The children were covered by Child Health Plus, okay? So what that means is the children had separate insurance that were not reconciling. There's no premium tax credit for the Child Health Plus. So Child Health Plus, Essential Plan, and Medicaid, you don't reconcile on the tax return. I'm going to show you how we do that, okay? So first thing we're going to do is we're going to do the ACA worksheet, okay? So when we have this ACA worksheet, I just been kind of telling you, hit no, and then put the, just kind of fly right by, okay? First question, did the taxpayer spouse or any dependents receive insurance through the marketplace? Well, in this case, it is.
Yeah, now you're going to make it.
All right, in this case, it is yes. Why? I have a what? I have a 1095A in my hand, okay? Now, if they were through the marketplace and they got Essential, Medicaid, or Child Health Plus, everybody on the return? So say the parents were on Essentials and the kids were on Child Health Plus through the marketplace, I would check no. Okay?
So how do we remember?
All right. Well, if you have a 1095A, you're going to check yes.
All the time.
Yes. Okay. So if you get a 1095A, you will check yes. All right.
If you check yes, I mean, you have to see that there's a 1095.
Yes.
You can't just say, they can't say, yeah, we did it.
Yes. Mm-hmm.
They got it.
All right, so if you see, but the odd thing about 1095As is they don't always come to them in the mail. Sometimes they have to go get them off of their application on the website.
So we're checking
Just
in.
to note, I find that website very confusing. I mean, I'm
Right,
not
they
a nugget,
should just-
but yeah,
That's a lot of times why I'm doing what I'm doing.
yeah.
No,
Okay.
that's-
Same thing, you're afraid you're gonna not do it right and.
Yep, so, all right. So we have, that's where our 1095A, okay? So if we have the 1095, in this case we do, so we're gonna hit yes, okay? We take a look at the 1095A on this case, all right? And in this case, the 1095A that's on 16.5 shows what? They had insurance all year long for everybody, correct?
Well, just
Yeah.
him and her. Kids are on something else,
Child Health Plus,
right? So they're not gonna be on this.
but we have them accounted for.
Yep.
Yeah, so that means that we have all 12 months for everybody accounted for. So the second question down says, was the taxpayer, spouse, or independent granted a marketplace exemption, or did they want to apply for one? This is no, okay, on this one. So we're doing no on this one, okay? And after each name, okay, oops. After each name, we're going to check that first line, okay?
First box.
First box,
Again.
yep,
Each one.
each one, because they were covered by the marketplace or they were covered by Child Health Plus. All right,
I'm good with that.
yep. Okay, so we have that, correct? Okay. Now, if we look at our tree on the left, what do we see that's got a red? 8962, correct?
8962, yes.
Okay, yep, so we're gonna have that, all right? And so click on that. This is the worksheet, or excuse me, the form for the 8962. Okay, so this is the form that we will reconcile what they had for a premium tax credit. All right? Okay, so tax families, how many? Again, I talked about their tax family. And I'm not overriding this because grandma lives with us and putting 5, it's 4. Okay?
It's on your tax return.
Yep.
On the tax.
Yep. So now, in this case, the kids are covered by Child Health Plus, so they're under 19, have no income. So we're not going to worry about that box where it says enter your total dependents modified adjusted gross income. So we'll skip that. Okay.
Which one is that?
2B.
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 Okay. All right. On line 4.
Wait, 2B says total. You enter your total of your dependents.
Yes.
So aren't we supposed to put 4 there?
No, the income.
Modified.
Okay. And we'll come back. Like I said, we're going to skip that. Okay. So we're skipping that one. All right. On line 4, we have the federal poverty line. And we're going to pick. We're not living in Alaska. We're not living in Hawaii. We're in the other 48. Okay. So for this house, yep. And then everything is driven off that percentage that you see. See how it changed the percentage, the 239. Okay. So everything is driven off of that. All right. As we move down, we can see that they're basically saying that we should contribute $379 a month towards our health insurance. Okay, for the couple, I should say.
Where does the line 7 that come from? Yeah, I was looking, I couldn't find the table.
It's actually in the instructions for the 8962.
Okay.
Yeah, it's hidden.
Because I looked real quick, I was trying to
Yeah, if you go to,
take you around, I'll look better.
it's neat, or is it the 98, 99, I can't remember.
But it's, the software plugs it in for us, right?
Yes. Okay, so if we go on the 8962, there. Okay. If we figure out the percentage, see where it says 239 for our poverty percentage that we had? There's that number. Okay? So that's in there in the form.
But
All
we don't
right?
manually have to do that. Once we
Yeah,
add
it does it for you once you figured out all the income and stuff. So
That's how we got
that's showing you how that calculation works. And I'm not even going to try to show you how to do when somebody's gets married that part year was in the marketplace, because you don't even want to do that one. You can write in your little notes on that one, Jim.
the supervisor.
No.
Oh,
See Tim.
see, Tim, just Tim.
Yeah,
Yeah. My
Yeah.
list of see other things is getting long.
because even some of the supervisors, I'll get calls from them on that one. So, okay. So, all right. So we have that. All right. Now it says, are you allocating policy amounts with another taxpayer, or do you want to use the alternative calculation of your marriage? Okay. We're not going to hit there. We're going to hit no, because we're going to go to line 10, because they didn't get married in this year. So we're not doing an alternative. Okay. On line 10, it talks about what does our 1095A show. Okay. All right. Now, in this case, we have all 12 months. All right. So we have a yes. All right. So we're going to go, and if you look on line 11, you can see, since we have a yes, it basically just has a total for each of the boxes. So if we look on line 11, column A there says that we should go to our 1095A, column A. Okay? And that number shows what? Yep, exactly. All right. Okay. And then we says the column B there shows a B. Now, note too, what three columns have a green number? A, B, and F, right? Okay. Green number, and that we enter a number. The other ones are calculated, correct? Okay. So column B says 1095A, line 33B. And that is 7080.36. Okay. All right. Okay. And then the monthly, what did they get per month? They got 425. So we're going to put 5,100, that total. So if you look, column F is the only one missing, and it says we should take 1095A, line 33C. Okay. All right.
That's instead of doing every single month.
Mm-hmm. Yep. And that, we don't have to do that on there. Okay. So if I go down to the bottom, all right. Okay. So if I go down to the very bottom, in this case, they got too much insurance. So if you look at part 3, it says excess advance payment of PTC. So line 27 is saying that they got 2567 too much.
The government paid them too much?
Yes,
So now they gotta pay it back.
exactly.
They only have to pay back 15 months.
Oh.
Because their federal poverty percentage was below 250.
It's 2 points on. No.
It was 239, remember? Yep. Yes, Jim.
The 5,100,
Mm-hmm.
and how did that get calculated so it's too much?
Because remember it said that up here, remember on line 8B, it said that 379. Okay.
425.
Mhm. So basically, if you take the, if I take, if I take my 2567, I basically got $213 too much.
25.
Yeah.
So they got way too much.
Oh, that was line 27, the 2567, access advance.
Mm-hmm. So the excess, the 2567, you divide that by 12, basically they got $214 too much.
They were given 425, is that what C is? Column C is what the government gives them, or?
That's what they took. Yeah, that's what the government gave them from the
paid
information.
for them?
That's what the government gave them for the information they put into the marketplace.
Okay, so we really don't know what they gave them to come up with 425.
No.
Okay, so that's.
Mhm, yeah.
So they-
Yep. So yeah, so they just, you know, that's where they had it on there. So
So instead of 425, they said that they should have only been paying 3 something for them? 379, is that what?
well, they're saying if I look at that number, okay.
Look at what number?
Well, remember you were asking me about that that 379.
Correct, where it says monthly
Mhm.
contribution amount, 379.
Mm-hmm. So if
Who's
I
paying
take,
the 379? The government, or is that what we're supposed to?
that's what they say they should pay towards it.
That the
Mhm.
taxpayer should pay towards it.
Mm-hmm.
Okay.
All right. And give or take, if you take that, the second lowest cost silver plan, the 590, and you subtract 379, you get 211. So roughly it's saying that, you know, yeah, what they picked and stuff like that, you know, that's based on the second lowest cost silver plan, you subtract what they should be paying of that, they should have got 211. There's a whole bunch more math, but that's basically what it is.
Instead of the 425.
Yep. So, and then you subtract, you know that the 425, so that's where that 214, that's where I said they got 214 too much. Okay. So they really only should have got 211. Okay. All right. All right. Now, remember I said on this one that we have that 1,500 was the repayment, and that was because when I go back up here to line 5, that 239%. Okay. Now, let's say, well, I don't think they're of the right age, but we're going to kind of.
Where does that money go to, or where does that 1,500, where does that flow to on 1040?
It goes to your 1040, and it goes down there as far as calculating your tax. So it's added to your tax bill. See it right here, line 46. Okay. Yep. So on the main info sheet, we're going to say that. Go ahead. I'm sorry. Okay. We're going to say that Jessica. So we're going to do on our 8962. We're going to say Jessica is older. Say she's 18 in school, whatever, but she's not in college. We're going to say that she's going to make $5,000 from working at Tim Hortons. Okay. I'm on the 8962. Mm-hmm.
So you're doing a what if?
Mm-hmm. Okay. Which would be all right because we're still at 259%. So it doesn't really impact them. Okay.
So 2B is where you clear.
Yep.
How much did you put in there?
I put in 5,000. Okay.
If one of the children are working.
Yep.
And now we have to claim.
Claim the income because we have to put it on. This is where their income would go on our return. Okay. She makes 10,000. I'm still going to only pay back 1,500.
Because what's the percentage of it?
280.
280.
Okay. Oops. Okay. She makes 15,000. So I go in excess of 300% by 301. How much do they have to pay back now?
2550.
The entire amount.
2550. The entire amount was 5,100.
Okay. No, the difference. Yeah. Because all of a sudden now, because it changes a little bit with it changes their monthly contribution. You know, see how but I put that 15,000. So once you get to that 300%, all of a sudden now they have to pay back all of the advanced premium tax credit that they got.
They got 5,100 a day.
But they're excess.
The limitation's 2,550.
No, it's not limited this time.
No, mine didn't change. I put it in.
This is tough if
Put
you're
in
self-employed, you don't know what you're
15,000.
made.
What's that, Jim? Yep, put in 15,000. So if we look on line 5, it says 301%. Okay, their monthly contribution should be $591. Okay. All right. And if we look, we have excess 51, 2550. Okay, so now they have a limitation of 2550 that they have to pay back. Okay, now she's 21 years old, graduated from college, got a great job. So she's making 40,000. Okay.
Take her out, go with it.
Okay, now they're at 401%. They would have to pay back the entire $5,100 because their income's too high. This is where when you do, like Jim was saying, the marketplace, the applications within there, everybody gets so confused as to what income to put in that they get the wrong income, or the person that they called at the New York State of Health doesn't understand a tax return like you guys do to know what modified adjusted gross income is. And when they get done, there's a lot of times where people will come back and go, oh man, or they did the application for the upcoming year. And in this case, we took out $40,000 to pay a debt from our retirement that was income that we didn't anticipate. Now we have to pay back all of our premium tax credit at the end of the year. So all of a sudden they went from having a refund of $23.48 to owing $28.08. Okay, so see how that one works? All right.
That's what I got stung on first year.
Mm-hmm. When you didn't project the income correctly.
Oh, yeah, because I didn't know.
Mm-hmm.
Well, yeah, I didn't. Non-reportable income was still used in the calculation.
Yep. Yeah, and that's where you got to be very careful putting that stuff in the application. So, all right. So the next one we have is, okay, so we're going to do 16.2. No, I'm sorry.
So there's
We're going to do 16.2. Let's hope I got Sampson's in here. Or Simpson.
SAM. Right?
Samson. Say again?
SAM.
Okay. All right, so we got Sampson.
Oh, there it is, John.
Yeah, figures I didn't have Sampson in here either.
Really?
Well, I did a thing where I did a backup for somebody, and I think I wiped out everything early on.
Okay.
You won the lottery.
You won the lottery?
Okay, so when we put that in on the Aca worksheet on Sampson, because he did not have insurance, we put no, and he's not doing any exemptions, and we hit the third box. Then on the Aca page 2, you know,
We didn't have to do anything but do no. Basically, hit that box.
hit that box and then it calculates. So in the greater of the two, if you look, the 2.5% is 470 on line 10, and then 695, and you take the greater of the two.
So is 695 always the maximum?
Yes, right now, yes. It didn't used to be, but it is now. It was kind of grandfathered in. It was 95 and then went up, and now it's at 695. That's the limit or top end or whatever you want to call it
Until
till it goes away. Till 19 and it goes away.
So
So
now what's the deal? 709 and 66? And he gets 66?
852 he owes.
52?
Yep.
What does he get as a state refund?
It doesn't affect the state. He's still got a state refund of 54.
I got 66.
Yeah, it doesn't affect that. So, okay. So that's the way that goes in there. All right. Oops. Okay. So we're on problem 16.2, John Sampson. All right.
No.
No, we're on 16.
Oh, I'm sorry, 16.3. I'm on the wrong side. Simpson. We just did Sampson. Okay. We should have chose different names. That's too close together. Okay. All right. So we're on Simpson. We have their 1095A, but what does it show? It shows that they did not have coverage the entire year. Okay. Now, a couple things. Let's talk about the bullet point. It says, rather than receiving health care insurance through his employer, oops, I'm on Sampson, sorry. Rather than receiving health insurance coverage through Rob's employer, Rob and Suzanne obtained their insurance through the New York State Marketplace. They elected to accept the premium. They canceled their insurance as of November 1st, believing they had a better option. However, it didn't pan out. They went without insurance for November and December. Note, the advance premium payment for November had already been paid to the insurance company, used their 1095A to reconcile their premium tax credit and see if they qualify for an exemption for the months of November and December. Okay?
You can, if you're employed and offered health insurance, you can choose not to take your employers.
If it's greater than 9.5% of the employee, for the single plan, if it's greater than 9.5% of the employee's salary, yes, you can go to the marketplace. Okay, you can deny your employer insurance and go to the marketplace. But I tell you what, employers that have 25 or more full-time employees, they know this and they'll go right up to that threshold. Because if their employee goes to the marketplace because of this, they pay a penalty, the employer. Yeah, okay. All right, so we have on this one, the Simpsons. All right, so we're on our ACA worksheet, page 1. We are going to check what for the first box?
Yes.
Yes, okay, and that makes what? An 8962 pop up, okay? Now, our next thing is, says when was the taxpayer, spouse, or independent granted a marketplace or want to apply? Yes, so we're gonna do yes, okay? So if we look at our tree on the left, we should have an 8962 and an 8965. Okay, so we have both of those. All right, so we're going to have both of those, okay? So we have that. Now, for each of them, we are going to put that they had insurance all 12 months.
Oh, really?
Because why? What does it say there? Had minimum essential coverage and or is applying or was granted for an exemption for all 12 months. So basically what we're saying is we have all 12 months accounted for, whether it be insurance or an exemption from the penalty, we got all 12 months accounted for, okay? For everybody on there, right? Well, there's just the two of them, I guess, right? Okay. So, yep, first thing we're gonna go to is the 8962. So click on that. All right, we have their income in there. And what was their income? What's it show for you guys on 2A?
58, 659.
Mm-hmm, okay. Other 48 states, okay. So it shows their 5 is their percentage of poverty should be 366. So basically it's saying that they should contribute $474. So line 8B, they should be able to pay $474 of the insurance. Okay, that's their contribution. All right. Okay, now, are you doing the alternative to your marriage? You know, please always hit no and don't call me because you had one that said yes, because I don't want to do any more of those. So you still have to do those pencil and paper. There's no worksheet for that one. So, all right, now line 10. Remember, we checked yes if we had all 12 months. But in this case, what are we going to do? Hit no, right?
No.
Because we got to go down below. And then what is all up in red?
A, column A.
Yeah, column A, okay? Now, one thing I want to note on this for you is on the 1095A, the 425, the 1095A on page 16.8 in the workbook, line 31 for November, it shows they dropped it as of November, but they have the advance payment of the premium tax credit in there. That is because they are still responsible because the government already sent that to the insurance company.
They send it in advance.
Mhm. So now they're still responsible for that. Even though they do not have insurance, they are still responsible for that premium tax credit because it was already given to the insurance company. Okay? So we're going to put in the amounts. And yes, you have to type in every one of them. And you type it in the 703 going all the way down until what? October, right? All right, so we did column A. So you got all your 703s there? Okay. Okay.
I didn't put the 0.28.
All right. Now we got more red.
Okay.
Okay. So we got those all in there? All right. Now, next column we have is our column B, our second lowest cost silver, and that's done by county. In the offices, you'll have a chart that I send out to all the offices that'll have this in case that's not in there. But in this case, we do. So we have 590. And again, we're going to take that through October, correct? Oops, I missed one. Okay. All right. So everybody got that? Okay. And the last one we're going to have is column F on our computer, but column C on the 1095A. We have 425 through what month? Through November, because they went ahead and sent that ahead of time, like Mary Ann said, to the insurance company. Okay. All right. Okay. Okay, and in this case, when you look a little farther down, they're between, what are they, between the 250, or so they're between 300 and 400%. So they have to pay back a maximum of 2550. Okay. All right. So you can see that all of a sudden they got a whole bunch to pay back.
Is that where if you hit, is it 400% and then you got to pay everything back?
Mm-hmm. Yep. All right, now let's go to the 8965 on the left. Okay? And pop that open. Should look like that guy there. Okay. All right. Okay. So we have that. Okay, so we have that. Now this first one where it says market granted coverage exemption. Well, this is if they did the hardship. Remember that form I showed you that had 13 categories and then 14 says make up your own? Yeah, that's where you put that. And that's, see where it says exemption certificate number? Oddly enough, word pending fits right in there. Okay?
So
You put in the names and say they were going to do that for a hardship or something, but we're not going to do that there. We're not doing part one. Part two says their filing threshold was $20,800. That's the filing threshold for married filing joint. Their income's greater than that, so they cannot claim it. So you're going to put no on 7B. We can't do filing threshold. But what are we going to do in part three? Coverage exemption claimed on the return for individuals. Well, they had just November and December. What one exemption does that cover? That less than 3 months, right?
B.
Exactly. So we got to type in each name. So we're going to put Rob Simpson in the first one. We have his social as, I don't have it in front of me, I should.
They don't put it on this.
Then
Well-
put it on.
80122, and that's the way they'll do it. 801225252.
What was it? 80122.
52, yep. And our exemption type is
B.
B, okay? And what months are we,
B
What's
is
that?
because of, they
Oh,
last
the.
less
Yeah.
than 2 months,
Yep, yeah, less 3 months or
or
less.
I mean,
Yeah.
less than 3 months.
And then we're gonna hit, which months did they ask for the exemption?
November and December.
Exactly, okay? And then we're gonna put Suzanne Simpson in there. And I don't have hers here in front of me, but let me see if I can find it real quick. All right, Suzanne is 285-448525. And she has that same short term in the last 2 months. Okay? And that's how you do the exemption. Okay?
So what does that prove?
So they don't have to pay a penalty, but they still have to make up what the difference was.
They still have to, yeah, they had too much on the credit, the premium, advanced premium tax credit, but they don't have to pay the penalty.
The penalty for the 2 months they didn't have it.
Yep.
Start in 2019, there's no penalty.
No penalty.
If they don't have it at all,
There's still no penalty.
there's still no,
Mhm.
but they're still gonna be able to get and go into the marketplace.
Mhm.
So they'll still have to worry about the 1095-8 form.
Mhm.
You just don't have to worry about the fees and all that kind of stuff.
Yep.
That would be the penalty.
Mhm.
That's not too much. This year we still.
You can't, if you decided not to, like the other guy there, not take insurance. And then at any point in time during the year, you can still sign up, for it, right? Or do you miss it if you don't?
If you don't sign up
If I
during,
don't, yeah, I decide I'm not gonna have insurance this year, and then in February decide I better get insurance.
Mhm.
Can you still sign up for it?
In New York, yes, because open enrollment runs through the end of January.
Or
And if you don't, then you're out of luck, unless you can have a special exemption, like you had a baby, got married, you know, something.
But if I wait till March, it's tough darts till the.
Mhm.
Oh, so we can't jump into the marketplace any month?
No, not for a qualified health plan. Now, if you do an essential or Medicaid, the answer is yes.
So I gotta figure it out if I give up my practice, I have to start
Well,
in
but
January to figure out.
But you'd have a special exemption because you had loss of insurance because of your business. So you'd have it, we'd put in for a special exemption on that one.
All right, so if I, January, February, if I still have my other office open, I'm still working, I'm okay.
Mhm.
So if March comes and I close that office too, 'cause it's not working out,
Mhm.
then I can still go into the marketplace.
Yes.
Yeah, yeah.
It's
If
in the
you
month.
lose your job, you know, halfway through the year, you can, what do they call it, like change something, yeah.
Okay. Just out of curiosity, what do we have here? What does he owe?
I have him owing $1376 and state refund still $658. Like I said, this doesn't do anything to the state. None of this comes anything to the state.
In 08, I was off in the beginning, so.
Okay. All right.
So the marketplace stuff doesn't affect anything on the state.
That's correct. Okay.